Okay, this is an article that I want to read to you because, again, as an astrologer, you know, and as a technical analyst for the stock market, self-taught, self-trained, and having a background as a loan officer and as an insurance salesperson. Okay, I have been involved in finance for a very long time, and also in real estate and selling land, home sites, mortgages, and the like. So the whole thing about taxes is not foreign to me, and I've always had to deal with it as a mortgage broker back in the 80s and 90s. And this again lends to the doomsday scenario that I always talk about in my website, which I don't talk about when I talk about financial stock market. I like to separate the two, but then in my website, I merge it all together, and I show you how the doomsday scenario, which everybody is so afraid of 2012, is not going to happen the way we think it's going to happen by a meteor or anything like that. We will already know if that was the case because we will see it, like I had mentioned, way in advance. However, we can see financially where we're heading as a country and as a world through the global markets. And, it only takes one apple to spoil the whole bunch. Well, that same analogy can be applied with the stock market, Wall Street, and the tax code. Okay, because all of these institutions that are moving, and the Treasury, all of these institutions that are moving great amounts of money back and forth, are determining the entire destiny and fate of every nation and over the global scene. Right? And that's very important because if there's going to be a doomsday scenario, it's going to happen through the financial. Okay, because when you strip a country of its finances, I mean, then they become vulnerable for you to do anything with them. Okay, and we always know that history is written by the winner. So that's why I like to mention to you and give you resources as to where you can read on and continue to look more how the doomsday scenario is coming closer and closer, but we are causing it, we are creating it, and it's happening from the greatest to the small. And you know what they say, that shit rolls downhill, and it really does. Here's this article, okay? The corporate tax dodging in the 50 states, okay? Quote unquote. A report that the CTJ reported today found that the largest corporations pay little or no state income taxes in any state for the years 2008 to 2010. In a prior report, the CTJ found that some of the most profitable U.S. corporations pay no federal income taxes over the same period. Okay. Both reports point out one of the major problems dodging the U.S. economy, the tax code, and its most fundamental flaw that not even the tax reformers dare to mention. Okay. The Internal Revenue Code serves two functions: raise money for the government and dole out benefits and subsidiaries to industries, companies, pet projects, individuals, fringe fisheries, mom and pops, things like that. In return for campaign contributions, votes, and fringe benefits such as free plane rides, bundles of cash, sweetheart mortgages, or well-paid jobs for staffers when they move on. It's the congressional bread and butter, and the economy, pays the price. Okay, tax reform has been in the air in the greater concentrations recently. The proposals address some of the symptoms of what's wrong with the tax code: tax rate, inequality, constraints on business growth, and complexity, and just etc. Everything across the gamut. We get that, but none address the most fundamental flaw that impacts every aspect of the tax code applicable to businesses. Okay, the separation of tax accounting from financial accounting. For example, the 3 years from 2010 from 2008 to 2010, Wells Fargo, okay, had reported 49 billion in earnings, based on generally accepted accounting principles, but it paid zero federal income taxes. It received a refund of $681 million. GE reported 14 billion in income in 2010, of which 5.1 billion came from operation in the United States. Income taxes? None. Okay? Instead, it claimed a refund of $3.2 billion. And this you can find in an article in the New York Times. Okay? That these companies were legally able to tell investors that they made a ton of money while telling the IRS that they lost money shows how absurd the system has become. Not to speak of the absurdity that they received hundreds of billions in bailout money from the Fed and the TARP, plus a host of other taxpayer-funded benefits and guarantees. Okay, this whole situation could be avoided if the portions of the tax code as applicable to businesses were replaced by a single paragraph that states that income taxes are to be paid at X, Y, and Z rates on income as reported to investors under GAAP, generally accepted accounting principles. GAAP allows companies to seduce investors in a myriad of ways with inflated profits and asset values. In fact, it incentivizes companies to engage in economically unproductive activities simply to make their numbers look better. Okay, the tax code does the opposite. It encourages the very same companies that reported inflated income and asset values under the GAAP to report little or no income to the IRS. The tax code incentivizes companies to invest heavily in economically unproductive strategies, such as massive lobbying or shifting income-producing activities offshore. Okay, making GAAP the accounting system for tax purposes would have a number of beneficial consequences. Among them, the tax rates could be much lower than the current rates because the income they apply to is the same inflated income that investors get dished upon a quarterly basis. Rates could be low enough to incentivize companies to reshore profitable companies. Okay, companies would face a choice: inflate profits, okay, and asset values to look good but pay higher taxes as a consequence, or report realistic numbers to pay less in taxes. As an unintended consequence, financial reporting might become more reliable for investors. And this is what is at the heart of the matter. Companies will have some certainty about income taxes and could commit to long-term investments with less risks. And that makes sense. The corporate tax professional could be shifted to produce activities and to productive activities. Okay, there will be still issues for professionals to tear their hair out over time, and from time to time, such as international activities. That's a real hair breaker, But most of the tax professionals now on staff could be retrained to do productive work. IRS personnel would also be retrained, and auditors would follow GAAP in their audits. Though the list of economic benefits is long, the noise from tax professionals and lobbyists would blow out the national eardrums of anybody. Profitable companies that pay no income taxes might dig in their heels, and unemployment might briefly edge up as tax professionals merge into other activities. Yet the business and economic advantage of using one accounting system for tax and financial reporting, along with the much lower tax rates, would be enormous. Yes, as complex and as dysfunctional as the current tax code is, it remains the congressional bread and butter, and that might never change. Okay? And again, so this is and something that I wanted to share with you, and I find it in a lot of financial websites, and it's something to think about because it's like an onion. If you open an onion and you look at the layers, you can see how things progress. Well, this is pretty simple. America has become a nation of greed.